Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Boyajian, currency analyst, and today is Monday, January 29th, 2018. Today's pairs are dollar yen, the euro dollar, the pound dollar, and the pound yen. We're going to start first with dollar yen. We can see dollar yen is still very much in bearish territory. RSI has dipped below the 30 oversold levels. That could be an indication of an upside reversal. We are seeing a modest attempt at a reversal today, with prices moving above Friday's close. On Friday, the pair did fall to a 4.5 months low, forming a resistance at 108.28. A drop below that support level could then take prices towards September's low of 107.31. 107.31 is the bottom of the recent range that dollar yen has been trading within. That's been in place since early 2017. So a drop below 107.31 could then take prices to below pre-election levels from the November 2016 elections, potentially driving prices towards the 100 key handle. However, if prices were to move higher, or at least today's upside momentum was to gather further strength, we could see trouble at around the 20 period moving average. If we move on to the 4-hour chart, we can see the 20 period moving average has been capping the dollar yen's gains. At the moment, it's just about the 78.6% Fibonacci retracement of the uplift from 107.31 to 114.73. So a key resistance area from 108.90 to the 109 handle. A successful challenge of that area could then help prices climb to the 61.8% Fibonacci at 110.15. However, we would need to see further gains to at least towards the 111 handle. That's the 50% Fibonacci retracement, as well as where the 20-day moving average currently is. So definitely another key resistance area at around 111, and then a break above that level could then shift the short-term bias to more bullish one. In the medium term, though, the outlook is also looking rather bearish. We can see the MACD is declining and below its red signal line. Let's now move on to euro dollar. Euro dollar is still very much bullish, but is facing some downside momentum. It is looking oversold. We've already seen the stochastic oscillators starting to move lower with a percentage K line forming a bearish crossover with a percentage D line. And also worth pointing out that when last Thursday euro dollar reached the 3-year high 1.2537, we can see from the stochastic oscillators that it was already losing momentum as it formed a lower high than it did in the prior week. At the moment, we are seeing support coming from around the 261.8% Fibonacci extension of the downlink from 1.2088 to 1.1915. A drop below that support area could then see prices targeting 1.2290. That's been a previous congestion area. And then below that, we have the 161.8% extension at 1.2195. However, if prices were to move higher and successfully break above 1.2370, we could then see resistance coming at 1.2430. That happens to be where the 50-hour moving average currently is in the hourly chart. So there is an important resistance level there around 1.2430. A successful break of that key level could then take prices towards the 1.25 handle, and then above that we have 1.2537, last week's top, and then the next target above that would come from the 423.6% Fibonacci extension at 1.2650. Let's now move on to the pound dollar, which did make a 1.5 year high 1.4344 last week, and that in fact was the 423.6% Fibonacci extension of down leg from 1.3549 to 1.3302. So clearly a very important resistance area forming there. At the moment, though, prices are heading downwards. We can see, although the RSI is still comfortably in bullish territory, it having crossed into overbought area last week, it is now trending lower and has just dipped below the 70 level. So intraday momentum is to the downside. The next support could come from 1.4020, which happens to be the 50 period moving average in the 4-hour chart. So that's potentially a support, an important support level for the pair. And then below that, we have the 261.8% Fibonacci extension at 1.3947. Below that, further declines could then see the 1.3850 level coming within range. That area has been a congestion area in the past, and then below that we have the 1.37 handle, which is the 161.8% Fibonacci extension, and then a drop below that we could see the bullish bias becoming at risk of turning bearish, as it would then approach the 50-day moving average, currently at around 1.3550. To the upside, we are seeing immediate resistance coming from 1.4140. That is a previous, it's not that previous, in the past a couple of days it's been a congested area, and then another congested area coming at 1.4250 before the last week's top of 1.4344 would come into range. And finally, looking at pound yen, that's another pair looking bullish in the medium term, though in the short term pound yen is rather bearish at the moment. We can see the RSI has fallen significantly over the past few days, and is just about hanging above the 50 neutral level. Immediate support is at the 78.6% Fibonacci Fibonacci retracement of the down leg from 1.5339 to 149.40. 78.6 for Fibonacci is at 152.55. Below that, we have the 61.8% Fibonacci at 151.85, and then we've got the 50-day moving average at 151.50, which just happens to be above the 50% Fibonacci retracement. So clearly an important support area there between 151.40 and 151.50. A drop below that level could accelerate the declines, shifting the bias much more deeper into bearish territory. If we look on the upside, we do have resistance at 154.30. That happens to be the 50 period moving average in the 4-hour chart. So an important resistance area there at 154.30. A successful break above that level could then take prices back towards the 161.8% Fibonacci extension at 155.85, and then not too far above that we have the 1.5 year high 156.07 from last week, and then the next target above that we have the 261.8% Fibonacci just below the key 160 level at 159.85. That's it from me. Thank you very much for watching and have a great day.